Oh, look at that. I ain't even start the recording. That was amazing. All right. So for recording purposes, this is going to be day 9 on the Strat, right? Day 9 on the Strat, week 3. All right. Let me put this up here.
The Quant Edge 4-week coaching program, week 3 on broadening formations, the third video. It's again Rob Smith at the end of black, Quant Edge VTF here at T3 Live. And as we move on our journey of understanding all this stuff, once again, very important if you're having trouble grasping the original 2 before broadening formations, go back and watch those videos, right? Those should be very clear. Time frame continuity levels should be very clear. Actionable signals should be very clear. And as we move on with the broadening formations, it gets a little more challenging. So not only go back and watch those, as you're watching this series, this broadening formations, the third week series, if you are unclear about any of these concepts, make sure you write that down. Make sure when we have our meetings this week.
I'm gonna rewind that because I walked out. I just want to see. I know he said something important.
More challenging. And as we move on with the broadening formations, it gets a little more challenging. So not only go back and watch those, as you're watching this series, this broadening formations, the third week series, if you are unclear about any of these concepts, make sure you write that down. Make sure when we have our meetings this week, you are prepared to ask the questions.
And that goes for everybody on class right now as well. And feel free if you're in the crypto one-on-one class, if you have a question on it, you can. I'm actually going to be doing a class for you guys. You can ask me that question there or just drop it in there. Just make sure that's to tag me, because if you just ask the question and you didn't tag me, I may not see that. And I don't want you thinking that I'm ignoring you. However, for everybody else, whatever questions that may be going over your heads, right? I know he was talking about like actionable signals and things of that nature. Like if you don't know what an actionable signal is or how to find them, or the proper time frame to be reading them on and things of that nature, please write those questions down and let me know about it.
Of what you don't understand. Because I understand that as we get all 3 together, it gets a little more complex. But just like with a trading plan, be prepared with your learning plan. So when you come to me and we talk about these things next Wednesday and Friday, be prepared with all this stuff, right? We've gone through the proof of broadening formations and as well how to identify them, right? By outside bars, using the actionable signals with the broadening formations, how they become support and resistance, and all this stuff we're going to get to again here. Then adding the time frame continuity with the broadening formations, combining those outside bars with actionable signals because that shows us it's an actionable signal and a broadening formation. Using the broadening formations to time actionable signals as those internal triangles break out, right? And then we finished off with drawing them, and we're going to continue on that now because there's ways to make it more clear, and that's what we want. We want clarity. We want to be able to quantify things, and we want to be able to identify them swiftly and cleanly. So let's go back to where we were.
Cleanly.
Just a slight review here, section 7 on drawing these things. All right. Because remember, those physical lines are only visual representation.
And look, my brother not even here no more, so like, please take into effect, or take into account rather, me say, you see how that educator is teaching something and is letting people know and letting them feel comfortable. Hey, if something's going over your head, please write those questions down and get with me and things of that nature. If you're not receiving things like that when you're learning something, like, come on, let's not, we're adults here. Think if somebody's teaching your children, you're gonna know, like, hold on. What's you missing a step right there? You know what I'm saying? So make sure that when you're learning from somebody, it feels like it will be you teaching that. Like, you know what, man, I really appreciate that. Like you breaking this all the way down. Make sure you're doing that.
representations, right, are subject to change anytime we have a change in time frame, continuity, or price achieves any higher high, lower low, right? So any exhaustion risk,
I'm gonna rewind that
risk
so
of
he
time
can
frame
say that from the
continuity
top
change any time on
right
drawing these
there.
things, right? Because remember, those physical lines are only visual representations, right? Are subject to change anytime we have a change in time frame, continuity, or price achieves any higher high, lower low, right? So any exhaustion risk of time frame continuity and the actionable signals, we want to know about that. All right, so once again in the target, outside bar formed here, so we know it's fractal triangle. If we go down to the weekly, we're going to see that fractal triangle. Higher high, lower low, lower low, higher high, lower low, higher high. And it went inside weak here and then fell apart, right? So if we draw off any series of higher highs or lower lows, you may draw like this, right? How
Right. And when he's drawing this, he was just showing you from a higher time frame, right? He lowered it down to the weekly. He was looking at the monthly, I believe. And let's just go ahead, right? Because we can always go back and double check, right? He's actually looking at the week. Oh, sorry. Didn't go further back. Right there. Target monthly chart, right? He's looking at the monthly, seeing the 3 bar right here, right? So you're not seeing the second leg that he's connecting it to because you can't connect it that way, right? Because we're connecting something that way that's starting to be more so like a bull flag or a bull pendant or something of that nature, right? So you can tell that he went down to a smaller time frame, right? This leg is connected to that leg, right? And you can see that line where, oh, he actually has his Brownian formation already drawn there, right? So now let's let
on
him bring it all the way back here. Now you can see where it's connected, right? And how these are connected. And this is what I meant when I'm saying, hey, I need to connect it to another leg, right? Because you got to connect it to another lower low. And once you have that, now you have your lows, and you know that you can always buy at the bottom of that Brownian formation. To make it simple, to the bottom of a trend line, right? Support and resistance. Um, so once you can just start simplifying things and merging them together, like say, hey, an inverted pin bar, this is a shooting star. However, you just got to remember a shooting star is found at the top of an uptrend, and that's what makes it a shooting star, right? However, it's still an inverted pin bar, right? So if I see an inverted pin bar here, I know, okay, both of those are inverted pin bars. However, I know to identify with this one, knowing that this is a shooting star, but I'm still going to say inverted pin bar knowing that this is not a shooting star, right? Because the uptrend was right here. The shooting star, you would have had to find it at the top of an uptrend, right? So when you understand the concepts of these candlesticks and what they do, it gets fairly easy.
however, since an actionable signal doesn't form until the time period of the bar is complete, remember something's either forming an inside bar, but once it closes, then it is. We want to draw the triangles after the change in time frame continuity. So a new 60, a new day, a new week. Once it closes out is when you can start drawing them, right? So before this broke through here, you could come off these lows here and these highs here.
And that's very important to know. And that doesn't just go with broad information. That can go with the 50% retracement. That could go, and it actually goes with everything in trading. Where when you're drawing, right? Like let's just say you're just drawing this trend line. You don't want to draw this trend line and attach it to this, and this candlestick is still growing. That doesn't make any sense. The most sense that it's going to make is attach it to that one, right? And you're going to be seeing that it's testing that. And then you'll possibly see, oh, it closed under and then it reversed back down. So you can see that as a resistance. Well, I wouldn't say resistance, more so of a rejection area.
And then it breaks through, and remember, they come resistance. So in this case, this triangle is now resistance against that. However, if you wait until the next bar, these close out, you'll also notice these are lower lows of here, like
Yeah.
so. So it's still being cased in this. The higher high, the lower low, the higher high, and the lower low. In this case, it would be on support, trying to break in through here.
And please note, this is the range, right? It's just how I'm able to always identify with the range. We could draw a straight line down like that and then a straight line down like that, not the diagonal one, right? That is the range. All of these candles are inside bars. Please note that, regardless of the fact they're not inside bars to its previous bar, right? To its previous bar, this is a 2 down, this is a 2 up, this is a 2 up, two up, two up, two up, two up. However, this is an inside bar to that bar. This is an inside bar to that bar. This is an inside bar to that bar. This is an inside bar to that bar, and so forth all the way through. Even this one took out its target. However, where did it close? Inside of that range, right? And then what happened? Boom. So all of these candles are immersed inside of this range. Right here is when it broke out, stood out of that range for a little bit and entered this range, and most likely rejected the 50% retracement of that candlestick and then came right back down, right? So please note that.
It's for this reason that you can drive yourself nuts in drawing billions of triangles. That's why we need to time them all together, right? It may be support, may be resistance, but it's going to line up, if it is, with the other two universal truths. Right? So the drawing of triangles only helps us to visualize the range expansion, right? Just a visual way to help us. But
Range
once again,
expansion.
it's much more important to look for time frame change continuity combined with actionable signal that reclaims that previous range, right? I can't stress this point enough. If you try and do one part of the universal truths, one part only, you'll fail. All three of these matter. Everything has to line up together, all right? So there are ways that we can draw things that will help you visualize better than drawing the actual triangles themselves. So, therefore, the lines can be drawn as seen here to represent those reclaim levels, right? So, horizontal levels are not support and resistance, right, in the classic technical sense. They're levels of reclaim. So, this is a very key point why people fail trying to use support and resistance. Classic technical technician would be looking.
Now, understand when I'm drawing support and resistance, I'm always on a fib, right? And I'm always using the bodies of the candlestick. We'll get to like how I do certain things, but however, what he's saying is 100% true, right? Because somebody will draw a line right up there and then a line right here and just say, oh, this is resistance. What the fuck? Explain it to me. Why is it resistance? Oh, well, the candlesticks aren't going up there and da da da. I could debunk all of that shit. It just doesn't make sense. No, it's rejecting the 50% retracement of this candlestick. And then I could take you to any chart and show you how we play and we retrace each candlestick. However, you may not see that because you're on the wrong time frame, right? And you're not utilizing multiple time frame analysis to truly see what they're trying to do, right? So that's 100% why, because it's like if this was truly um a resistance, you know what I'm saying? The candlesticks would not go back up there, right? It's just we're seeing it right there. We're not seeing the rest of the price action. However,
This is where it's
however,
at.
however, we always got to keep in mind to do our due diligence. Like he said, this is a reclaim level. Just like all of these support and resistance are reclaim levels. Why they reclaim? Because, man, let's just do the knowledge. What is doing the knowledge? Look, listen, and observe. What the fuck is support? Support. I just supported my hand to not fall no more. That is solid. I have a desk. You know when you get mad and you be like, that trade, you just your hand didn't fall down anymore because there was a support right there, right? What is resistance? Right there, the ceiling. You're hitting your resistance and you keep coming back down. So once you start doing the knowledge, now you start to understand, okay, cool. If this is a support, it's not supposed to break. This is supposed to always be supported. If this is a resistance, nothing could get past this. Now I'm saying we know how to manipulate a building and put a elevator in a building and get past something, right? To shoot through resistance. And you just have to let your mind open up to start understanding these words, right? And that's why I say define the word, right? Because once you start to define the word and you really start to understand these words, you start to really realize these words are nothing but excuses for me to utilize at any time to manifest whatever I want to manifest. Right. So please do keep that in mind about support and resistance. Support and resistance is just levels that are trying to be reclaimed. Hey, does it look like price action is about to reclaim this level to go ahead and shoot to the next resistance? Think in that sense.
If this is a breakout, right? The thing we also know about the broadening formation is it turns the best looking chart to the layperson into the worst looking chart on our terms. That's a good thing. What do I mean about that? Anybody who was drawing this line or using this as a so-called pivot At this point, when this green bar closed out, nobody in the world would say the chart looks bad. They would say it is a successful breakout here of that. However, we know we can either trade that continuation. However, we prefer to go inside and drop in because at that point, it's a failed breakout. And then we can look to go all the way down and take the other side. So we can draw these off the old highs and lows, like in here. So conversely, at this point,
And I'm gonna teach y'all something. A lot of people know how to draw support and resistance and draw the lines and see, hey, this is where it's ranging. What you have to understand is, hey, look, when it hits that line and that motherfucker starts going back down and you drawing your line, buy low, sell high. That's what you have to remember. What is gonna get, what's gonna happen, just like how he said, we're all gonna say that was a successful breakout. Hey, this would look great or whatever, and then a return. You know what I'm saying? This is why we don't buy the resistance, right? So real quick, um,
it looks
I,
awful.
I do my best not to do this. However, I want this to sink into your brains. And I'll bring it to a smaller time frame so you guys could are able to truly see it. Right. So what he's saying is what we like to do, I like to buy reversals. That's what I do. I like to buy reversals. However, if I miss the reversal, what we like to do is fall inside of the trade. Like me, I would have bought it right there, right? I believe I bought somewhere around here. It was like, no, I'm lying to you. I bought around here. Yep, I did, and then it fell all the way down. I was happy when I seen my actionable signal off of that one. Well, not actionable signal. I take that back. My universal reversal pattern off of that one, and we continue to push up. So I already know 9 times out of 10 we would come down here. This is where my stop loss at. I might end up moving my stop because I know that hey, we could take out this liquidity, bounce off of the support, and then go ahead and go back up, right? Because that's what we've been doing. You know what I'm saying? And you can see it in pre-market. And it's like, oh, now we took it all the way up. So I know that hey, we can bleed a little bit. However, I don't want to look to bleed a little bit. I'm looking for a gap up on SPY, right? And a nice push on energy, right? So, and just to show you a better example, it's like we like to fall inside of the trade. See, it's pushing up, it's a continuation. All right, we fall, we like to get in. You see that inside bar? We like to get in right there. Boom. We always look for a drop, inside bar, and get in. And it doesn't have to be an inside bar, right? This is just my universal reversal pattern. So it's just gonna fall in line with what I'm looking for, right? Um, bring it back over here. Oh, it's right here.
it's on the lows. However, if we get back up into here, that's something we're going to want to know about. Reclaim levels. Right? Since by definition, the range of broadening formations expand over time,
Yeah.
we can look to the higher time frames to reveal the major reclaim levels, the big things, right?
He's excited. I could tell because he skipped over that word and he put that word in there for a reason because it's an important word. He said we look to the higher time frame. We must look. You see how that it makes it sink in a little bit. We must look to the higher time frame, right? So I'm gonna just rewind that one more time so that you can implement that word into that sentence. Well, I wouldn't say sentence. We don't want to go to prison, right? Into that verse, so that you can hear it a little clearly.
Over time, we can look to the higher time frames to reveal the major
Must.
reclaim levels, the big things, right? Right, and that's when we saw that SPX, right? When you get the triangles here, and it's a little tough to see in here, but this was that most recent one with the 2008 crisis. Once once it come back here, you'll see a slight level here. Once it reclaimed that, we get back into here. Once we can identify these reclaim levels, reclaim back to the downside, reclaim back to the upside, we can visualize the broadening formation in its larger sense. And then anytime we have full time frame continuity to the other side, we know to go with it because we know that they will broaden over time, right? So we can match that up. right? We can see the setups racing towards the other side of the range. Most people won't take these trades because as the range extends,
Let me see if my brother on here. Oh, he not on here. I don't think so. Big B, if you on here, I'm trying to go through it, but I see there's a lot of other people on there. This is exactly what you were seeing when we got on earlier on the rise, just getting on the charts, and I kept telling you like, hey, look, it's gonna go and hit this price. It's because it's magnetized and it's gonna continue to go. Now you're hearing him talk about it.
their perception is that they are chasing. We know that the range is expanding and to go after things when they are doing this.
All right.
So if we look at a monthly chart of Google, and I'll go into this in just a little bit more detail in a few minutes. The monthly chart of Google, there's a massive outside month range, 128 points, followed by a multiple inside bar pattern, then range extension that finally range reclaimed. Here, this bar was 128 points wide. People asked me about Google for months after that. I'm like, you got to get out of there, right? Because there's a multiple inside pattern. So what did it do? It went
Popular.
inside.
Boom, boom, boom.
It
It
went
ate them. Yeah.
outside here. It
Smashed
went
them.
inside. But then here,
And understand what he's saying right here. So I'm putting more context in it. So like even when you're on social media and you're seeing someone like, all right, you see how I'm talking about Tesla? It makes sense. Why does it make sense? Because I'm buying shares and I'm dollar costing averaging into it. Now, if you bought an option, you get and think about it. It's a monthly chart. And let's say, oh, well, I got 6 months out. Let's not even do 6 months. That's 1, 2, 3, 4, 5, 6. I went 8 months out. You ain't make nothing. They chopped you up. If anything, you possibly could have got to break even, possibly. And that is a lie, right? Because it's inside of this. You're gonna have to, depending on where you bought, and even let's say you bought you bought right here at the middle. It gets chopped up. Why? Because you got to think of your theta. You got to think of your theta. So if that contract is now losing 50 something dollars each day, or let's just say 20 something dollars each day, not each week, not each month, each day, how the heck did you make your money back? How the heck you on social media talking about, oh, da, da, da. That's why you're only going to hear a percentage and you will never see the profits. You will never see anything of that nature. Why? Because it's impossible. It's impossible. Not trading options, they have metrics in there, right? That you have to learn how to utilize to capitalize with it.
once it finally broke that bar, that's something we wanted to know about because then it reclaimed it. And you can see the lows of all these openings and closes here. Boom, here was our reclaim. Eventually came back and took both sides of this 128 bar out in triangle fashion. So if we look at a weekly chart, and I'll go to this again in a second because we want to clean it up for you, not only can we go after those reclaim levels of highs and lows, right? We want to go after the reclaim levels of outside bars because we know they're fractal triangles, right? And so at this point, this was an outside bar. We can draw horizontally because that tells us we're getting back into that, right there. It's exactly what we want to do right there.
And look, I don't care. It's not about I'm not caring. It's just it's coming to me. So I'm just like, look, let me go ahead and give it to you. Right. So you see this bar right here, and is it off of this bar? Could have been off the hour. Yeah, it's off of the hour. And it's my red bar. I'm gonna just clean up this chart so it doesn't look crazy to y'all. See everything that he's talking about? That's exactly what I'm doing. Exactly what I'm doing. I'm just coming in. You see that dotted line? Pow. Where is it going? Pow. Do we see it? That's the broadening formation. This is the bottom, and you're in the middle of the range of the broadening formation, right? I had it on this green bar. I mean, on this red bar. However, I could put it right here. Now that I'm seeing that, boom, boom, boom. Do you see how we just entered the new range? Look, ooh, we tested it. Actual signal. Boom, smashes right through it. Let's reclaim that level. All right, we reclaimed it. All right, don't you see the cup and handle now? That's called a continuation pattern, right? I could speak about all of it, and it's just because I've traded all of it. So I've learned how to emerge all of it together, right? So long story short, we are now reclaiming that level, literally. You know what I'm saying? And that's exactly what he's explaining right now, coming inside of that range. Let me go in the chat real quick. You just gave me an idea. I can alert on my fibs. Absolutely. Yep. You can. You can just go to your chart once you fib it and literally you're gonna start understanding my alerts, bro. You know what I'm saying? They're just getting into ranges and 50% retracements. You know what I'm saying? So it keeps me patient into getting into my trades as it re-enters range. Absolutely. Yep. Absolutely. And that's where the patient comes in at. Now you're understanding. And it's like, oh my gosh, it's really me. I know what to do. It's my patience. It's like, hey, let me wait for this to show me that it's gonna do that. I'm not just gonna jump in because hey, I just see this moving that way. We can truly capitalize off of this fucking move, bro. Like, look, 4-day chart. We can truly, it's my fucking universal pattern, bro. We can truly capitalize off this shit. And it's off of a fucking cup and handle. You see the cup? All right, let's get back to the class. Because then I'm gonna start wanting to get on the chart. All right. But yeah, you seen it, Macau. Proud of you, bro.
This upper line here reclaimed this outside bar. And so the importance of that is that most people, when they learn about the triangles, are trying to time them from the exact low of the triangle or from the exact high. We don't have to do that
Oh,
because we know that the range is expanding.
and it's expanding. And what did I just show you? I just showed you that 3 bar and just showed you that, hey, we're nowhere near that top and that's the bottom and we're like literally in the middle of the range.
We want to look for the setup to go back the other way. We don't have to get the exact point. We want to get out if we're on the wrong side during that,
Yeah.
but we don't have to enter at the exact bottom of a triangle or the exact top. We don't have to do that because if it's right, if the triangle is true, we're going to have more reclaim levels to go after once it starts racing to the other side because we know it'll do that. And here you can see when this bar got up in here after the reclaim, it took the highs out of that outside bar, right? Took the highs of that outside bar. Bam. All right. The lower lows, the higher high, the lower lows. If we reclaim this stuff, we're going back to higher highs, which indeed.
My bad, Rob. I want to teach too. You see, this is your 3 bar. This is your resistance, right? The body of the candlestick. When we draw a line straight through it, you see the universals, they reclaimed the level. You see the universal, they reclaimed the level. So fire.
Indeed, it did. So, in summation, now that we've.
I'm gonna pause this. Everybody, pull out your phone, take a screenshot. I'm gonna pause this. Everybody, pull out your phone, take a screenshot, and review that over and over and over. Now I'm gonna let him read it.
Quantified the price action down to 3 universal truths of price action. The chart visualization should become crystal clear, right? When you see things in only these terms that we are discussing, right? You should see actionable signals. You can see the colors or black and white of time frame continuity, right? You can see outside bars, right? Once you only look in these terms, things become much more clear.
It's just like anybody that's going through my coaching program right now, you're seeing much more clear, right? Even when I take you to certain time frames, you're only now able to see my universal reversals and you're seeing them clearly, right? Trade it. Just trust yourself.
So we want to identify when we're at risk for conditions to change, right? Because markets are dynamic. A lot of people will look at charts over the weekend and you'll see guys spew out, spew out, spew out. That's when the market is static and only monthlies are in force, right? We want to know when we're at risk of change.
Meaning it is rhetorical fucking creating a watch list and the market is closed. This I had to learn that shit. It is rhetorical. Now, If you're talking and it's rhetorical to scalp or to day trade and do that. That is just rhetorical. Now, if you're swinging because you're investing, or even if you're trading, but you're looking to invest into an option contract and you're buying a good bit of time, that is different, right? Because you're planning your trade and you're trading the plan, right? However, how are you gonna plan a scalp for the next day? That just doesn't, you know what I'm saying? Or even a watch list for a day trade for the next trade for the next day. It doesn't make sense. It's best to create that watch list in pre-market. Don't let that go over yet.
So anytime a time frame exhaust, time frame continuity risk is we're subject to time frame continuity risk. A new month, a new.
And for example, that's so when I make a watch list, don't y'all be seeing sometime like, dang, Moody, this one just gapped up or this one just ran through your entry point or something of that nature. And that's why when the market is open or pre-market is more easier to predict and know what's going to happen with that security.
New day, a new week, a new 60. Right? Right? If I'm a time frame exhaust, the market is static and only monthlies are enforced.
Jesus Christ.
Right? We want to know when we're at risk of change. So anytime a time frame exhaust, time frame continuity risk is we're subject to time frame continuity risk. A new month, a new day, a new week, a new 60. Right? We're at broadening formation risk, right? If any previous higher, low, or low is reclaimed, right? Failed breakout. We want to know about that on any time frame. That's going to
Yeah,
matter.
yeah,
Right? We can still time the longer ones with the shorter ones, but we need to know that because as you can see here, when they race to the other side, is how people get slaughtered. Right? During rev strats, you have time frame continuity risk, broadening formation risk, and actionable signal failure are all subject to risk. Right? That's why we want to know about these things. That's changing, right? Because by reversing that equilibrium, it's also going to in order to do that, it's going to change time frame
equilibriums are just inside bars.
continuity, right? In the 1 bar case, it's a 1 bar broadening formation because it's reversing also. Because it took out one side of a range and retraced into the inside bar, that's broadening formation risk, right? As well as the actionable signal failure risk because that inside bar has failed to maintain. Okay, so understanding these concepts and trying to put everything together that we've been working on, let's look at some live chats. If we go back to the IWM small cappers, once again, if we go back on that triangle, that was that actual inside day going to the highs. Once again, if we go back to that longer term stuff, the weekly, we can see the triangle like this. Very clear. Here's your highs, here's your lows. Right? We talked about the reclaim down here. Now at this point, when it went kicking pattern on the weekly, right? People aren't.
Oh, for the ones in the coaching program. Bree had asked me about a book, and I had dropped that book in our chat. And the only book that I've ever read, and the only book that I would tell anybody to read. You will find that pattern in there, the kicking pattern. And please do know every time he talks about an inside bar, or he talks about a nice reversal, understand that my universal reversal is what he's talking about. He's just not calling it that or seeing it like that because it's how I see it. However, it's just like, what I will call this pattern. However, he's going to say it's the bullish kicker pattern. However, I'm going to see it as the morning star.
Used to things moving like this. And on the weekly, right? People aren't used to things moving like this. Right? We're totally good with that because we know it's kicking pattern weekly, reclaiming all these levels here. Right? You'll notice here, not only to reclaim the levels, once again, let's draw them. To help you look at them, you can go reclaim of the outside bar there. This was an outside bar. Kicking reclaim at the same time. All right. This one here, 1, 2, 3, all these things getting taken out. This was an outside bar. Pow, pow, pow. How is this thing so strong? This is why. So when it comes up into here, what can we expect it to do? We can expect it to go to new highs. So
Nice.
if we go back and then we look
Moody,
at what the old high was.
hey bro,
Yeah.
can I ask you to go back like maybe like 30, 45 seconds?
Yeah,
Yeah, that seems like a gem.
it is. Just notice that he's talking about the outside bars.
Kicking reclaim of the outside bar there. Not only to reclaim the levels, it's again, it's drawn. To help you look at them, you can go reclaim of the outside bar there. This was an outside bar. Kicking reclaim at the same time. All right. This one here, 1, 2, 3, all these things getting taken out. This was an outside bar. Pow, pow, pow. How is this thing so strong? This is why. So when it comes up into here, what can we expect it to do? We can expect it to go to new highs. So if we go
Nice.
back and then we look at where the old high was.
Hey, I have a
Why?
question.
Yeah.
Is that how PMGs are formed?
Yes, bro. I was exactly why I just paused there. I was like, and another reason it just shot up that way is because that was the PMG. This one
Okay.
took that one out, so you have that one, that one. That one already got taken out by that one, so you have that one and you have that one. However, this is on a weekly chart, and it's a weekly chart, so you know if this is looking like that or it's really looking like do on an hourly chart, right? So that was them taking all them out with one candlestick. Absolutely, and that's how PMGs are formed as well.
Uh,
Make sense?
yes, sir.
Okay.
We can expect it to go to new highs. So if we go back and then we look at where the old high was. Here. Once we start ripping through this stuff, we got a pretty good idea this thing's going to take this out. Right?
Nice.
Because this broadening formation is going to broaden. Right? So when people thought, oh, it's way overbought, this thing's taking out the highs almost for sure. Right? at that point. And we're still going to use what we know to be true, actionable signals. And anytime that thing has full time frame continuity to the upside, we want to be involved because we're pretty certain that's going through there. If we go,
McCallum, that's what you did today. Anytime we have full-time frame continuity involved, we want to be involved. And that's what you saw. And you saw it and you was able to ride it. And that's why you felt so good. Why? Because you knew what it was. It wasn't just the fact that, hey, we're buying, so just buy calls. Like you knew this is what they're doing. You know what I'm saying?
go back, well, if we go back to that weekly, like so, or the daily, this is an old triangle here. Once again, remember we talked about this actionable signal here. Now, as time moves away from them and up into here, right, it can be breached a little bit. What's going on in here? We know we're up into this neighborhood of this thing here. Potentially, we've got the lower lows here. This area becomes very important. Right? We're going to use the old triangle as support, as well as the bottom of the new one, the top of the old one, the bottom of the new one. And so what we would look for here is actionable signal with full time frame continuity to the upside if it's going to break out. As of right now, it's an inside month.
Yeah.
Potential combination with an inside week.
Oh.
So we'll be watching that this week to see if we can take out all of this stuff.
So now that he said that, I'll just bring it to the chart real quick. Most people talk about SPY, so let's go ahead and put it on SPY. Now you're gonna be like, dang, Moody, you kind of see what you're talking about now. All right. This month is still going. You see that we didn't win two down on the month, had to tweak the bottom, right? coming back into its range, as you see. It's trying to reject it, coming back into the range though. All right, let's just drop her down to the weekly. Weekly is inside. Do you get it now? Look, let's show you the monthly one more time. Monthly, it's dropping down. That's the wick, right? It came down to like that 50% retracement. Moody showed them. Don't expect them to be able to just see that, right? Came down to the 50% retracement, didn't hold, shooting back up, right? As it's shooting back up, see that wick on the green candle right here is now trying to enter that range. Moody showed them. Don't expect them to see that, right? So now drop it down to the weekly, coming into the range, right? Because you can't read the wick, obviously. Right now, you will be able to read it if you continue to learn from me and things of that nature, right? You got to tweeze the bottom right there, starting to push back up, coming inside of the range. You can go ahead and flip this candle, and you'll see that that's right at this 50% retracement, breaking straight through it, right? Another thing I like to do is go to my 2-day, my 2-week. I see that we're definitely inside. I have longer time to be able to break out of that range. Right now we start manipulating things. Let's just take it to the daily, right? If we see the daily, nice reversal, meaning 2 down, 2 up, pushing right back up. This is also a morning star on a different time frame. As you see this bar right here. Now we're trying to enter that bar, meaning that was a 50% retracement off a bigger time frame, right? And this is a whole nother range, right? Coming from the weekly, right? So not only are we entering a weekly range, but we're also entering a daily range right here. Literally, you can see the dotted line is inside of that range, right? So now it's just because I know about time frames. Take it to the 3-day. Nice tweeze the bottom reversal, right? And I was able to see that off of just the monthly. But that comes in time when you're able to read these wicks, because you can see, oh, tweeze the top now. We definitely on tweeze the bottom reversal. You know what I'm saying? So once you're able to manipulate these charts and you can see it for what it is, you're gonna start seeing where they're trying to take the price to, right? So I could just put it on the 4-hour and we could just see the inverted head and shoulders being populated and we're starting to push over. So I would definitely say SPY 512 for tomorrow. I would definitely like to see 512 for tomorrow. Um it's a possibility that, we could only see about 508, right? And then a retracement back down to the support to push back over. However, I'll call the 512. And yeah, you know what I'm saying? It's just knowing. And when I said it could reject, you know how we're trying to get into that range right there? You're seeing it right here, right? That's what I meant by like reject. You got that cup and handle literally where at the 50% retracement. You know what I'm saying? And then just reject it, couldn't get all the way to its top. Just like this one, you see? Went to its 50, almost got to its top, so it went straight to its resistance, came right back down. So it's just about knowing how to play these candlesticks and knowing where they're going. That was a little over extended, so let me put the class back on there. All right, let me let y'all rock out real quick.
Here and going to new highs. And once again, we will be exhaustion risk should we do that. But so long as we're above that monthly, we would be inside month and up. And if it happens this week, you're also inside week and up. So we're going to be paying attention to that. If we go to Google again, in the Google, you see all this stuff like here, right? And if you look back here, fractal triangle here, all right? Tries to go range expansion up into there. But if we go back to that bigger chart that we were talking about this outside bar, all right? And then the lower low off of here. Once again, we're going to look for combinations. What would cause this reclaim on the monthly? Weekly takes them out and comes back up, forms a hammer. Didn't go immediately. We had to go after that outside bar again, right? I'm sorry, if we go back further, it's further on that one. My bad. Sometimes charts are too big. So we got that slight lower low. It took out that big monthly bar. All right. All these reclaims of all these outside bars. And if we go to the daily, You're going to see this. When that occurred,
And please, the biggest thing I could tell you to know, you see how we're going through so many different time frames. You see me do it, where it's like we're not like, oh, let's start off on this. We're looking for confirmation, reclaims, actionable signals. This is what it's doing. Okay, cool. Let me go to this one. We're manipulating the chart to know exactly what's going to happen.
see, this is what happens when you draw too many triangles, right? So we can get rid of all that, like so. What occurred is formed the daily hammers. Hammer, hammer, inside hammer. And so when you had this inside hammer, right here,
Momo hammer.
710, and go back to those weeklies. 710 is all up into here. Reclaim, reclaim, reclaim. The monthly opening that month and that July. Here, and then as we go into July, the monthly opening was 705, right? So we reclaimed all that stuff with those actionable signals going full time frame continuity back to the upside. That's when we can start looking for things to race to the other side,
Right.
right? So if we look at Etna, so Etna, you're going to see this. Here's your monthly. Here's your fractal triangle there. Right. If we go to the weekly,
I see it.
see the lower low, the
Smash it
outside
into
week, fractal triangle. Boom, we wanted to reclaim that. Did here. Off to the races, right? Triggered by the inside day. Right, so we always want to be aware of all this kind of stuff. If we go to Jack in the Box, this is very similar to the Google. Big outside bar here. That's something we want to know about. Then, outside month, reclaim. Outside month here, never broke. So what happened here? We had this internal triangle in here, right, that then came back down, said slight higher high, slight lower low, couldn't make the higher high. The outside bar, additional triangle here, which never gets broken, but this was below that, got outside of this, right? So this was the reclaim level that it sat right on. What did it do to reclaim? It went inside month. Boom, takes everybody out. At this point, you can see this triangle like that. Used it as support. And then anytime right here, when we had full time frame continuity to the upside, we know where it's going. It's taking that out. All right? Really nice move for Jack in the Box. If we go back to that example of CTXS. So when I made the video, it had come back already up
I
into
like
here.
that too.
We
They
talked about
fuck.
the inside, outside, inside. Explosion to the downside. All right. So if we go back and look at that 60-minute. See how powerful that was.
See how he said, let's
Gets
go to
killed,
this.
makes the lower low.
See how he said, let's go down to the 60 minutes, see how powerful that was. How can you tell a move, like people be like, oh, the daily or this. How can you tell?
Comes back up all the way through and takes the whole range out. It broadened again.
Mm-mm.
So
Again.
when would you know that that would potentially happen?
Yes.
The outside bar of the inside, outside, inside. Reclaim.
Reclaim.
Here. Now we're looking to take that out back to the upside, which it did.
Absolutely.
If we go back to some momentum combinations, if you look at this KEM Kemet, you can see a bunch of things on the weekly. First of all, you're going to see the Rev Strat here, inside bar countered with
I don't
hammer,
like that one.
right there.
You gotta put too much money into that.
You're also going to see this outside week.
Okay.
There's another momentum hammer coming up, another momentum hammer coming up. Remember, when you go through the charts, you want to be able to see these things very clearly. So we have this outside week. First of all, we go to the month, and what do we know about the month?
What do we know?
Momentum hammer, if it takes that out. So momentum hammer, potential.
Now, what do we see? What do we know? What do we know?
Off the outside week. If you go to the day, see this higher high, low, back up. All right. Slight outside bar. And here's your combination. Momentum daily hammer expands the outside week, reconfirming the monthly momentum hammer to the upside. If we go to ACIA from last week, what did we know to be true? The monthly opening was 59.61. The weekly opening was 60.67. With the Rev Strat week going in force, let's draw that so you can see it. Shrink it down even more. With the Rev Strat week going in force, below 60.55. Right? Inside bar counting with shooting star. So anytime the daily is red, going below that, what do we see? Inside bar opens here for the potential 1 bar Rev Strat down, bearish engulfing day, Rev Strat month, Rev Strat week, full time frame continuity to the downside.
Nice.
If we go to the 60, when this occurred, within this tight range, we had an outside bar, the high being 58.86. So when this opened here and started coming through all this, it's also 1 bar Rev Strat 60, reclaim of the triangle, Rev Strat downside, full throttle downside. Every reason to believe that's going to work, right? You can also see the outside bar calling the top, continues to expand. Right. This is very clear on the ACIA, this triangle. When I talk about the triangles needing to grow and people having a tough time chasing after they are already growing, starts off in here and eventually took both sides out all the way. And that's why we can look for those macro triangles, those big ones, right? Those big outside bars on the monthlies. That tells us where the real big moves are going to occur. So at this point, we'll conclude week 3 video series on broadening formations. And I understand that at this point, this is going to be the most difficult part. However, when you grasp the first 2, it becomes much easier to see this stuff. First of all, we always want to know, what are we going to create if something works? Is a weekly going to change the monthly? Is it going to turn into a monthly signal? Are things going to Rev Strat something? Do we have time frame continuity at all times, and when are we at those risks? And then as you start to look at how these formations are setting up to try and test one side of the range, test the other, and when they occur. So this week is only a few days into the month, and we have inside weeks. Either side of these inside weeks will trigger the monthly to go that direction outside of a gap in reverse. All right. So this week will be a very interesting week to discuss this as we're going through it. So once again, it's very important to have a full grasp on the first 2, the time frame of continuity and the actionable signals, very firm. And then as you understand that, looking for these reclaims, looking for where you are, because if once you can use the broadening formations, you're not always trading momentum by always going directly into new highs or new lows,
Facts.
because we can look for these reclaims, and when you get them, you get the bigger moves. Here, failed all these guys, outside bar expansions, coming off and then reclaiming again. This is how price action works: back and forth, back and forth, back and forth. And as you see these more and more, things will become crystal clear on what is happening. Are we trying? Are the triangles contracting by forming an inside bar? And as they do, is there an internal triangle that's trying to grow? And when it does, close out those longer term signals and then use the triangle to trigger them with full time frame continuity.
That part.
All right. I will see you on Wednesday and Friday. I'm Rob Smithy in the Black Quantity.
Get it? That part. All right, y'all. So that was that, man. That was that. Um, yeah, that was that. Let me see something. All right, yeah. So that was. Oh, let me stop recording.